Rick Santelli is standing by at the CME in Chicago. And Rick, take it away. Let's see the numbers.
Yes, and there are a lot of numbers, so we're going to go slow. And let's start with durable goods, shall we? On durable good orders, we're expecting a number that's going to be somewhere in the vicinity of up 8 to 8.5% on a preliminary, not coming across the screen. So we're going to switch gears. We're going to look at the trade balance, minus $96.6 billion. So the good news there is that it's not a record. The record was in March when it was minus $161 billion, but these numbers are still astronomically large. Now, durable goods is coming in, and get this, preliminary durable goods is coming in at 16.4%. 16.4%. I don't even have anything like that on any of my history going back. That is just a huge preliminary number, and I'm sure there's going to be lots of distortions in there. And it's probably to do with airlines, airplanes, and transportation. Why? Because when you take that out, it goes to up 0.5%, which in and of itself is still a really strong number. Up 0.5% would be the strongest number of the year, strongest number going all the way back to September of last year. And if you look at orders, capital good orders, non-defense ex-air, it's a whopping 1.7%. That is a wildly strong number, but it's only the second strongest number of the year. January was 1.8. So seeing these surges really is something incredible considering everyone's looking for numbers going in the opposite direction. And if you look at shipments right now, shipments are up 0.5%, much stronger than we were expecting. Now, GDP is hitting the wires. And what's interesting here is this is the third time around the block on first quarter GDP. The number initially was meant to be minus 0.2, and it really did shift dramatically, down 0.5%. And this all has to do with imports, exports, and all the issues that were going on trying to get ahead of the tariffs as everyone's trying to figure out what's going on with tariffs. I'm not sure anybody has figured out what's going on with tariffs. And minus 0.5% will be the weakest GDP going all the way back to the first quarter of 2022. Now, if we look at consumption here is actually pretty good, but nowhere near expectations, and it's less than half what it was. So this is really somewhat shocking as well. Consumption drops to 0.5% from 1.2%. The price index at 3.8 is 1/10 hotter than 3.7, and the PCE core moves 1/10 hotter to 3.5 versus 3.4. These are really large revisions for the third time around the block. Initial jobless claims moving lower. Now, this is interesting, especially after Senator Warren and all the many politicians and people that think rates ought to be lowered were striking distance to all-time highs in stocks. 236,000 on initial jobless claims. We're expecting a number closer to last week, which was 246, but that's now moved down to 245. 236,000 will be the smallest number going back to mid-May of this year. And continuing claims, of course, remain over 1.9 million, 1,974,000. That means it's now, what, 1, 2, 3, 4, 5 in a row over 1.9 million. We're going back to 2021. But I still say, and Leisman used to always say this, is 1.9 million today seems like sort of a high level, but throughout history, it is not a high level. And that really is about it. I could go over wholesale inventories, retail inventories, but the numbers really, down 0.3 on wholesale, up 0.3 on retail. I'm not sure that gives us a lot of information. Yields moved up a bit. Maybe they're moving up a bit on some of the hotter than expected pricing issues within the GDP number. And the pre-opening equities are still pretty darn green. So, Joe, Becky, and the gang, back to you. It was a long list of data points, and it certainly seems as though the move in interest rates after all of that seems to be a bit higher. But, boy, rates really have moved down rather dramatically.